Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. I've asked Keith Bowers. He is the Managing Director of Lotus Resources. ASX code is LOT, nice and easy to remember. Now, Lotus Resources have the Kayelekera uranium mine. It's a restart over in Malawi, and they've just come out with their DFS. Interesting time to have a chat with Keith. Keith, welcome back to Small Caps. Great to see you.
Great to see you as well, Kerry. Nice to be back. Thanks.
Well, I'm really pleased that you are talking to us today because you've just come out with this DFS, which seems to be very, very positive. So can you just give us a brief update as to where you're at the moment and why this DFS is so important?
Yeah, so I think if people have been listening to the last couple of presentations or the last couple of webinars we've been doing, really the focus for the last 18 months or so has been around four main areas that we've identified from the scoping study that we thought could add significant value to the project. And these things have been things like ore sorting, connecting to the national grid, making sure we use the asset better within the circuit, and looking at our tailings dams optimization and all that kind of stuff. And what the DFS has really done, it's allowed us to take all this technical work that we've been doing for these last 18 months and incorporate it into a new feasibility study or into a new study that we're talking about. And they've had significant benefits in terms of our operating costs specifically, but also I think in terms of de-risking the project as well. So we're very, very happy that all four of those areas that we have identified have had significant positive benefits in terms of the study moving forward. And at the same time, we were also able to go back and do a more detailed assessment of the current status of the existing plant. So what do we have to refurbish? What do we have to replace and all this kind of stuff? So we spent a lot of time on doing that, and we're really happy with the numbers we've come up with that as well. The one thing that is different that we haven't really spoken about is we've made the decision to put in a brand new acid plant rather than refurbish the existing one. And the reason for that is because of the excessive corrosion that we've seen in the existing acid plant. It hasn't operated since 2014, so it's been sitting idle for the last 8 years or so. So the decision made was to actually put in a brand new acid plant. And that's been included in these capital costs as well. And we're still being able to maintain the $50 million we've always spoken about for the main refurbishment. Okay. And then an additional $38 million of capital has been included such that we can get the benefit from the ore sorting, from the grid connection, from the acid and all that kind of stuff, which has driven our C1 cost down. Our cash costs are less than $30 per pound, which we're really, really happy with.
I think that's what you spoke about before, that you'd like to get it below $30 a pound, so you've achieved that. Let's go through these four areas that you spoke about and what the DFS has pulled up with that. Let's start with the ore sorting and the importance of that.
Yeah, so what ore sorting does for us, it allows us to do two things. First of all, it allows us to increase the uranium grade that has been fed to the main plant. So for example, if you look through our feasibility study, you'll see that the average grade coming out of the mine over the 10 years is 600 ppm. Mm-hmm. Yet we're able to feed into the main plant on average 800 ppm. So we've upgraded by a factor of 1.3 the uranium grade fed into the plant. That allows us to not only increase our production rates because we're limited by our ore throughput at 1.4 million tons per annum. So if we're able to feed in a higher grade, we obviously produce more uranium at the back end. And of course, because we're producing more uranium, we're also able to dilute our fixed cash costs as well. So that helps us get our operating costs below the $30 per pound. So that's the one area that it works really well with. But the other area that's also important for us is there's a number of stockpiles that are currently on surface that are lower grade. So sort of around the 350 to 450 ppm. Now, in a normal plant, those grades would not be economic. But we can take those materials now and put them through ore sorting and upgrade them so they're 550 or 600 ppm. Those now become economic feeds for the plant. So we've been able to extend our life of mine now by treating these stockpiles as well. So a real double whammy for us. I'm very, very happy with the results we've seen so far.
When you say you're going to double, was it double the life of the mine? What are we?
Well, not double. We're just saying we're able to increase the grade, but we're also able to bring new material into our mine plan as well that previously maybe we would not have been able to include. So I'll just give you a rough example. We mine for 6 years. We treat stockpiles for 4 years.
Okay. What about, you've got the stockpiles and you've got the mine itself. What about exploration around that to increase the life of mine?
So we've reported on previously the Livingstonia tenement. So Livingstonia is about 90 kilometers to the south of where the existing Kayelekera operation is. We declared a new inferred resource there for about 4.6 million pounds. We think there's still some significant upside to that. So we will be looking at doing more exploration there. But the idea around Livingstonia is that you would have an open cut mine there, obviously, but we'd probably do the crushing and the ore sorting there as well, and then truck the concentrate that we produce from the ore sorter from Livingstonia up to Kayelekera to be treated in the main plants over there. We've also been doing exploration work at another area called Chilumba. We just started to get those assays back in again. We're doing a review on that. This was really very much of an exploration target, just a couple of holes there to try and identify any mineralization. But again, the same concept would exist if we did find some additional resources at Chilumba, do an open pit, put in a crusher, do ore sorting, ship the concentrate up to site. So that's where our main focus has been. But we still acknowledge that there is an opportunity to grow the Kayelekera resource as well. We did a program last year. We were able to extend it. We went out and pushed the limits of the resource out by about 200 meters or so. I think there's still an opportunity to look at something similar to that as well, to grow the Kayelekera resource itself.
In terms of focus, Keith, how much time are you spending on those other exploration targets versus Kayelekera? I just want to get a flavor, I guess, or a feeling for the focus for the company at the moment.
The focus for the last couple of months has been on the feasibility study and getting that out. And the focus for the next couple of months or next 6 months or so for the company will again be working on things like getting the mine development agreement for the operation. I will be working on offtake agreements for our product. We'll be talking about financing as well. So that's really the focus for the next 6 months. The exploration is interesting, and I think it's something that we can certainly follow up on. But we've already got a 10-year life of mine. My sort of thinking is let's get the mine up and running when the uranium price, of course, is at the level that makes it economic for us to do that. But once we're up and running, then let's spend a bit of time on the exploration and try and push that life of mine past the 10 years to the 12-year mark, 14-year mark, 15-year mark.
I think it's important for us just to reiterate the fact that Kayelekera was a past producing mine. You acquired it from Paladin back in 2020. So there's a lot of infrastructure around and in the mine, isn't there? So
correct.
Talk to us about the numbers. How much infrastructure is there and how much capex do you need to put into it to do the restart?
So when we look at what we have there at the moment, we obviously have the main processing plant. So we've got the main part of the circuit, the crushers, the mills, the leach tanks, resin and pulp, where we do the recovery of it, leading into precipitation, the drying and packaging and all that stuff. That core process is still going to be used in our revised processing plan. What we've changed is we've inserted between the crushers and the mill the ore sorting concept. So the ore sorter is just a additional piece of equipment that we've just inserted into the current flow sheet. When we look at what we have with that existing facility, the guys are coming back and telling us there's some work we need to do around some corrosion stuff that we've seen on it. There's some work we need to do in terms of stabilizing some ground and repairing some bunds and those types of things. But the main thing that I was worried about was actually the electrical stuff. You know, what do the transformers look like? What does the motor on the mill look like and all that? And the guys have come back and said they're in really good condition at the moment. So the amounts of money we're spending on that side is probably a little bit less than we've expected, but we're probably going to spend some more money in terms of fixing up the bunds and fixing up the concrete works and all that kind of stuff. So we've always quoted $50 million to refurbish the plant. Mm-hmm. That $50 million is still a valid number for us to refurbish the plant, but we need to spend extra money on ore sorting, extra money on connecting the plant to the grid, extra money on nanofiltration, which allows us to improve our acid utilization and all that kind of stuff. And that's why the capex has gone from $50 million to $88 million, as we announced in the feasibility study.
What are some of the challenges? Because we talk over here in Australia about the cost of electricity and, of course, inflation. Is that having any impact? The DFS has come out, but do you see that having any impact going forward?
I'll answer that in two ways. I'll talk about the power first, because I don't think we've been as influenced as much on the power side as maybe some of the other operations around. So we speak about the connection to the grid, and that's an important part of our power strategy. But we also recognize, because we have an acid plant there, and we can retrofit a steam turbine onto it, and we can use the heat that's generated in the acid plant to turn the steam turbine to generate electricity. That steam turbine produces about 2.5 megawatts of power. Our total consumption is only 6.9 megawatts per hour. So we're getting a significant portion for $0, because it doesn't cost us anything more to operate that steam turbine. From that, we're then connecting to the grid, and we're getting about 4 megawatts from there. And then we're also looking at some solar options as well, and then installing some battery energy storage systems as well to try and smooth the whole process out. We've calculated that our average power cost is about 10.6 cents per kilowatt hour. And if you compare that to the previous operation, where they were operating with diesel gensets, at a $1.20 diesel price, they were running at about 34 or 35 cents per kilowatt hour.
Wow.
So we're down 66% on that cost. And that's been a real big savings for us. And also, what I might add is, by going through this hybrid route for it as well, we've made a significant reduction in our carbon emissions as well. We've reduced our carbon emissions by 21,000 tons per year. That's a 70-odd% reduction in our carbon emissions as well, which, when you look at it, you always talk about a uranium project. Well, what's a uranium project trying to do? Is trying to answer the zero carbon emissions things. Yeah. It would be a bit stupid if you've got a uranium mine that's producing this product to reduce carbon emissions, and yet to produce the uranium, you're making a whole lot of carbon. So we're really happy with that. So I think from that side, we haven't really been impacted by inflation. On the reagents, we've seen some significant increases in the reagent costs, but not only an increase in the cost, but also an increase in the delivery times as well. So normally, while you might expect that you only have to hold, say, 2 months worth of reagents on site, we're looking now that some of our reagents, we have to have up to 6 months storage on site to cover the logistic issues we're seeing at the moment. And that has meant our first fill dollars have gone up significantly compared to what we initially thought.
Talk about permitting for me, Keith. Let's talk about the environmental side of it. It's Malawi. What's it like to work out there? And also the mining license. Where are you at with that? Are there any challenges going forward?
So we already have our environmental license. We have an environmental management plan that's been approved by the Environmental Department in Malawi, and we're complying with that environmental management plan. It's been updated at the moment, because we're going to move from care and maintenance, obviously, into operations. We're referencing back to the one that Paladin previously had, although we do recognize there's some new legislation out there that we need to comply with. So from an environmental perspective, no issues there whatsoever. We have the license, we have the plans, we have the processes, procedures and systems in place to make sure that we're a safe operation. From a mining license perspective, we had our mining license extended for another 15 years in September last year. So we've got a mining license now until 2036 going forward. We have a lot of our permits already in place. However, we are required to renew some of our permits. And as an example of one we have to go and renew is the permit to transport our product. So when we take the product out of the mine, there's obviously a permit required for that. We haven't done that for the last 8 years or so. We need to go through the process of getting that permit updated. And there's a couple of other smaller ones as well, like permits to take water and those types of things that we also need to work on. But again, the main permits, the main licenses are already in place. We don't have to worry about those. We're just talking about the smaller permits we require.
Water, Malawi. Is that a place where water is abundant, or are there some challenges with that?
Water is abundant in Malawi.
That's good.
Yeah, water is not an issue for us. And based on what we know happened when Paladin was operating, and based on our own updated water balance, the project is a very, very small net consumer of water. So we're required to take a very small amount of water and bring it back into the circuit. And that may come through storage dams that we already have on site, or we may look at getting a small amount of water from the river. But again, we're talking, it's literally 10 or 20 cubic meters a day of water we need to take out of the river. So very, very small amounts. But what that means as well is that because we've contained all of our water and we collect all the water that lands on our site, we're not discharging anything to the environment. There's no water discharge to the environment at all. So we don't have to worry about contamination or anything like that from our discharges.
We're talking about starting the mine up again. Talk to us about the time frame of that and what that's looking like, because it's a restart of a previous mine, but there's still a bit of work to do.
Correct. So the way that we've framed it in the announcement that we put out there on the DFS, we're going to spend until the end of the year looking at our mine development agreement. So we're busy with negotiations at the moment with the government of Malawi. We're going to be looking at our offtake agreements. The team was over in Montreal a month and a half ago or so at a conference there, talking to a lot of the North American utilities. I'm off again at the end of this month to go to London to go to a World Nuclear Association conference to meet the European and Asian utilities to talk to them about offtake as well. So we're moving forward with our offtake negotiations. And at the same time, we're also going to start some discussions around financing options as well. Whether we look at equity, whether we look at debt, whether we look at some early payments from offtake as a way of financing the project, we're going to be looking at those things. So that's really our focus for the next 6 months. And I think that we would be in a position to make a final investment decision by the end of this year. However, that does depend on the uranium price that we can either sign up in our contracts, or alternatively, if we decide to put material into the spot market, at what rate or what price this current spot market is. Today it sits at $48 per pound. $48 per pound is too low for us to start up there. We need a number higher than that. But we do know that once you've made that final investment decision, the engineers are telling us it'll take us 15 months to produce our first product.
Right.
Okay. And then 18 months to be able to deliver our first product to our customers.
And I think that's what people need to understand. You don't just turn on a mine. And, you know, for people out there that say, oh, it's a simple process. It's not. Keith, I'd like to know from you, what's the bigger macro picture? You're talking to a lot of people. We all know that nuclear energy is low emissions. The world is wanting to go to zero carbon. Why do you think that the spot price hasn't risen a bit higher? Because it's going to take time to bring these on stream.
I certainly think it is going to take time to bring these. I mean, everyone's talking about the new reactors and extending life of reactors and all those things. It'll take time for those to come on. I mean, you're hearing some real positive sentiment coming out of the UK, for example. They want to build 8 new reactors by 2030. France has made commentary about the same thing. Definitely 8 and potentially another 8. China's talking about 150 new reactors.
Wow. So,
I mean, all the words are out there, all the commitments are out there. But I still think, based on what we're seeing with Russia and Ukraine, the current geopolitical risks associated with that, the high inflationary world we're sitting at the moment, I think everyone's taking a little bit of a sit back and waiting to see what happens. And I think if, once you see the high energy costs start to come down a little bit, a bit more of a normalcy in the markets, I think maybe then you'll start to see people coming back in again, and you might see that price picking up. Because, I mean, if you've been following the history of the uranium, of the spot price specifically, SPUT, or the Sprott Uranium Trust, has had a huge impact on it. So if you go back, they started trading in August of last year. The price there was around $30 to $32 per pound. They came in and they've bought, I think the number's 23 million pounds or something like that since last August on the spot market. Drove the price up to over $60 per pound by April. It's drifted back down again. But one of the things about the SPUT fund is it can only buy uranium when it's trading at a premium to its NAV. And at the moment, it's not trading at a premium to its NAV. So it's actually not bought a lot of uranium over the last 2 months or so. I think it's probably less than 500,000 pounds the last time I looked. And I think that's had a bit of an impact on the market as well. This big buyer has actually stepped away from the market for a short period of time. And I think when things start to improve, when their unit price goes up again and they come back in the market, I can see the spot price starting to increase again.
Keith, do you think the world recognises how important nuclear is to a future of our, because we are in an energy crisis, no matter which way you look at it, and no matter what country you look at, there is an energy crisis, and nuclear energy can help fill part of that void. Do you think the world fully understands that, or are we still in the early stages?
I think the world's view on nuclear has changed significantly over the last 2 years. I think if you'd asked me that question 2 years ago, I would have given you quite a negative answer. I'm quite happy to give you a much more positive answer now. I think, yes, people are starting to recognize that. I think there was a report, I think probably about a week or two ago, where the Greens in Finland have acknowledged that uranium is the way forward for energy. So this is a Green party standing up and saying, yes, we approve of nuclear power. We believe that's the way to go. I think that's a real significant change. And as I said, you've got all these all these countries now talking about new bills. In the US, the amount of legislation that has passed over the last 6 months to support existing nuclear plants that are struggling from a financial perspective is amazing. I mean, there's all these tax credits coming in, all these different types of things to try and support or to extend the life of these nuclear reactors. I think there's still some issues out there. I think everyone recognizes that the cost to build a new nuclear reactor is huge. Yeah. If you talk about the new ones they're building in the UK at the moment, I think they're talking $26 billion for 2 reactors. So
really?
It's a huge amount of cost. It's a massive, massive cost. So that's what's happening in the UK. But then again, we look at what's happening in China. China can build a brand new reactor in 5 years. I mean, and they've proven that time and time again. And their costs are way less than that.
So why?
So it's just, they've had, I mean, if you read through the reasons why the prices have gone up for the UK one, COVID, it has a massive impact on it. They haven't made nearly as much progress during the 2 years of COVID. They've also had some redesigns that they've had to do and all those types of things, which has impacted it. So I think the initial cost estimate was, I don't know, maybe 13 or 15 billion, and it's gone up to the 23 to 26 billion at the moment. So I think that's still an issue. And I think a lot of politicians and a lot of people still believe that's a huge cost. I mean, how many solar farms could you put in for $26 billion? A fair amount, I reckon.
Yeah.
So I think that is a big issue. But there's all other things that are happening. You talk about small modular reactors, and there's a lot of talk about that at the moment. That's definitely a way of bringing down the cost for the installation of nuclear plants going forward. And I think that'll have a benefit. I mean, they're talking about the first SMR coming online in 2028.
All right. Well, let's get back to your project over there in Malawi. Why do you say that this particular project and what you're doing with the restart is a great opportunity right now?
I think one of the things, I mean, anyone who started up a mine or has operated a mine will recognize that starting mines up is not easy. No. And I think one of the things that we have in our benefit is that this mine actually operated for 5 years. We have all the historical information there. We have all the historical data that was associated with that operation. So the debottlenecking, the solving all of the issues when this plant operated has already been done. We already have the knowledge of how to operate this plant. So really simple things, when we look at a ramp-up curve for this plant, we've been relatively conservative in the feasibility study. We've said it'll take us, 12 months to ramp up to full production. The engineers came back and told me they'll do it in 3 to 6 months.
Right.
And when you're looking at project financing and you're looking at project payback, one of the things that kills projects is extended ramp-up times. If you predict 1 year and it takes you 2 years to get up there, the impact on your cash flow is absolutely huge. And I think we've overcome, or we've de-risked that significantly by acquiring or having a plant that's already operated. We already have 1.6 million tons of material sitting on the ROM pad. The ramp up of our plant is not determined by the mining restrictions and all that. We could effectively operate for the first year before the mine has to produce any tons. So that comes out of the window as well. So we've got a really easy picture from that. One of the things that I think people may have been concerned about, and I must admit it was something that I have been thinking about, is what about labor? Where are we going to get the skills from to be able to operate this plant? Well, I'm really happy to say that now that people recognize we're getting close to the restart, the number of ex-employees that have contacted us and asking us, when are you guys starting up? We want our jobs back effectively.
Oh, wow.
You'll be able to fill the 450 or 500 jobs, nationals, I'm talking about Malawi and national jobs, I reckon in fairly short time. I don't think we have any issues trying to fill those jobs. And even the expats we're talking about, a lot of the ex-employees have contacted me and said, we'd really like to come back to Paladin, to come back to Kayelekera. We'd really like to come back and operate there. They know we've got a fantastic accommodation. The camp's really, really nice. If you're staying in South Africa, There'll be charter flights that leave from Lanseria, just outside of Joburg, and fly directly into site. There's none of these long commutes that other people see, when they go to these remote sites. So it's a really great place to work. And we're seeing the benefits from that from the people that are contacting us and asking us for a job spec.
As a jurisdiction, for those that might say, oh, Malawi, what's it like? Is it a stable jurisdiction? Is it government supportive? Just talk to us about that, because people understand, certain other jurisdictions, but Malawi, good to work in?
Yeah, Malawi is very, very good to work in. It's known as the warm heart of Africa. The people there are very, very friendly. There is very low crime there. There's obviously some petty theft and all that kind of stuff, but violent crime basically doesn't exist in Malawi at all. The government, there's been a change of control in the government. The opposition party came into power about 2 years ago or so. Next elections are in 2025. The new government is very business orientated. And if you go back and you have a look at the history of Malawi, where was the main source of income, let's say, or how did they, what was the main industry in Malawi? It used to be agriculture, and specifically tobacco. As you can imagine, tobacco is not particularly flavor of the year at the moment. So they've seen a drop off in terms of their foreign exchange incomes from their tobacco sales. So they've been looking around over the last year and a half or so to try and understand, well, what is a new growth area for them? And mining has been selected as their new vehicle to be able to grow the country. So they're very, very supportive of ourselves and of the other mining companies as well that are also looking to start projects up there. I think it's important to recognize that the government of Malawi actually owns 15% of Kayelekera, and Lotus owns the other 85%. So they are a partner of ours as we work through restarting the asset. And as I mentioned to you earlier on, I was actually in country a few weeks ago. I got back last week or the week before, having negotiations with the government around our mine development agreement, which will set the fiscal regime for which the project will operate.
It sounds to me like you're going to have to come back and have a chat with me in a few months' time, Keith, because things are moving pretty quickly at the moment. Just sum it up for us why you think that now is a great time for our community to sit up and take some notice of Lotus Resources. Obviously, the DFS has come out with some very, very positive news.
I think there's a lot of fundamentals out there about zero carbon emissions. Uranium is certainly getting a lot more favor in the public opinion at the moment. I think people are recognizing we need to have nuclear reactors to produce power. Where they're going to get the fuel from? Well, at the moment, with the relatively small amount of supply, I think there's about a £50 million per annum supply deficit sitting last year. When we talk about all the growth of the new reactors, that can only grow. New mines have got to come online. And what are the best mines to come online? Well, those that have been on care and maintenance previously, they're easier to come online. They should be cheaper from a capital perspective. They've also been de-risked significantly. So the chances of them actually reaching their production profiles, hitting their cost targets, much, much better than any greenfield project out there at the moment.
Keith Bowes, Managing Director of Lotus Resources, congratulations on all the work you've done over the last year since you and I have been having a chat. And I'll speak to you again very soon. Thanks for joining me on Small Caps.
Thanks very much, Kerry. Good seeing you again.